What's going on, guys? Today we've got a great episode with John Pompliano. We talk through everything you want to know about. BlackRock's got a brand new data point out about the Bitcoin ETF and how it's making more money than the S&P 500. Talk about why Fiat is broken. What's going on with the Federal Reserve? What's happening to the stock market? And also, Elon Musk started a new political party. What does that mean for economics, the financial global system, and why is so much of politics becoming a distraction for investors, and how can you avoid it? We get into all of that and much more today in my latest conversation with John Pompliano. All right, John, what's the first topic?
All right. BlackRock's ETF, their Bitcoin ETF is earning more than their S&P 500 ETF. Obviously, their Bitcoin ETF is much newer. Why? How? Who's buying this? What is going on?
Well, the first thing is that Bitcoin has now assaulted Wall Street, and Wall Street, this is their full undivided attention and focus, as they realize that if you embrace Bitcoin, it brings you new customers, new assets, and new revenue. And if there's one thing that Wall Street likes growth, and Bitcoin brings growth. And so you are about to see a ton of Wall Street products rolled out with Bitcoin touching them, in them, around them, related to them, etc. Now, this is very interesting because it's not just about, hey, we have some growth. It's all about relative performance. And so I think that there's like $6 trillion or some crazy number in the BlackRock S&P ETF. And in that ETF, they charge like 0.03%, right? Well, if you go and you take a look at what the Bitcoin ETF is bringing, they're charging, I think it's like 20 basis points or 25 basis points. And so they're just charging way more. And so you can have less assets in there. Now, they don't care if they make money because of high volume on assets and a really, really low fee, or if they make it on smaller set of assets and just a higher fee. They actually would prefer to have the higher fee because guess what's going to happen? Right now, the Bitcoin ETF just eclipsed the BlackRock S&P ETF. Guess what's going to happen as more assets flow into Bitcoin and Bitcoin's price goes up? I expect actually that the Bitcoin ETF is going to be 2 times the amount of revenue that the S&P ETF throws for BlackRock. Everyone else is paying attention. All these other asset managers are like, wait a second, why aren't we doing that? That seems like a pretty good deal. And sure, maybe we don't get as many assets and maybe we can't even charge as high a fees, but it's better than zero. And so that's where you're going to see this all. So my takeaway is not so much that, yes, the Bitcoin ETF earning more is kind of like a shot heard around the world. Everyone's like, oh, wow. But it's actually the second order effect, which is then all the other funds are now scrambling to figure out how do we play in this space.
So it brings up 2 key points, I think, which is one, Wall Street seems to be chasing the fee. Would you agree with that? That, if there's money to be made, they're going to go find that corner of the market and do that. And then the second thing is there a race to the bottom with fees for the ETFs, right? Obviously, we saw the big launch last year with a bunch of different ETF providers being approved and starting to accept funds. Is it a race to the bottom with fees? And it's just basically, as a retail investor, I want the lowest fee?
Well, Wall Street's whole business for the most part is how do I make money and not take risk, right? That is these large institutions. Now, there are risk takers within these firms that also are balanced by people who take zero risk. And so you end up with kind of lower degree of risk and the firm overall performs. Now, what you see is the asset management business is amazing because guess what? People put money in, they rarely take it out, and they charge a fee to it. Makes sense as to why they're doing what they're doing. Now, with that said, what I also think is pretty interesting is that we are likely to see compression on fees, but the compression on fees is not necessarily from the ETF providers because there are people in the market with lower fees, but they don't have as many assets. So it's still a distribution game, not just a fee game, but it's distribution plus fee. And so, yes, there will be some kind of compression there. I actually think the bigger thing that is coming into the market is Bitcoin treasury companies in general, because those Bitcoin treasury companies, the ones that are operated correctly, they actually are able to grow Bitcoin per share. So the way to think about from a public market investor or somebody who's accessing the public markets and wants Bitcoin exposure, you can buy the ETF, you get direct Bitcoin exposure, right? If Bitcoin goes up 2x, you get 2x increase in price as long as the ETF tracks Bitcoin correctly. With the Bitcoin treasury companies, take a strategy or a MetaPlanet, what they've been able to do is grow the Bitcoin per share, meaning that if you started out and let's say that you had exposure, one share is 0.1 Bitcoin. Well, if they do it correctly, then eventually one share gives you exposure to 0.2 or 0.3 Bitcoin. They're growing the amount of Bitcoin. So this kind of idea of Bitcoin yield. Now, I don't think that investors overall can be treated as like a single group of people. I don't think they're all going to go into the ETF. I don't think they're all going to go get spot Bitcoin in self-custody. I don't think they're all going to go and buy Bitcoin and hold it, at a third-party custodian. I don't think they're all going to go buy Bitcoin treasury companies. What we have watched over the last 10 years or so is we have drastically opened up the aperture of access by now giving people many different ways to get access to the asset. The beauty of doing that is you now are able to attract more and more capital pools. You are able to introduce Bitcoin as a different tool, right? It's kind of like if I give you a hammer and you're somebody who all you do is roofing, then you only use the hammer for roofing. You don't know what else to do. But if I take that same hammer and I now say, oh, by the way, maybe you are somebody who you hang art. Well, you're going to use the hammer in a different way. Somebody else, maybe you do construction. Somebody, right? And you start doing, it's the same tool. But you actually don't need the hammer for roofing. You need the hammer to be able to hang the art. And so that is really what Bitcoin now is doing, is it's now being able to be used by people who use it for different things. Some people are using it for diversification. Some people are using it for hedging. Some people are using it for asymmetric exposure. Some people are using it as a way to actually increase the Sharpe ratio in their portfolio. Some people are using it as like some sort of calamity or chaos insurance, right? All kinds of different ways that people are using it. It's simply a tool that exists in the market with many different ways to access it. And when you give people different options, different people, the world's a big place, right? There's trillions of dollars of assets floating around. They're going to figure out different ways to use that. And that, I think, is really the story of the last 10 years of Bitcoin, is we have transitioned from a contrarian asset with very limited access to now we have something that has incredible access, both really hardcore Bitcoiners in terms of, on-chain or self-custody or whatever, all the way to things that frankly aren't very aligned with many of the Bitcoin ethos in terms of Wall Street's holding your Bitcoin, right? But also, what we have seen is it has transitioned from that kind of contrarian, type asset to now it is a mainstream adopted asset, which means we went from contrarian to consensus. And once we got to consensus, mass adoption, everything that people always wanted, like it is here. We are watching it play out. And what's pretty cool is like they're going to write history books about this. Like the rise of Bitcoin is going to be well documented in history. And we all are fortunate enough to live through this time.
When you think about it through an investor's lens here, there's so many different products now, right? You can do the Bitcoin treasury companies, you can do the ETFs, you can go buy it yourself, cold storage, right? Obviously, the main thing with Bitcoin has been not your keys, not your coin. How do you think about an investor's lens of which product to get attracted to? And I assume that means based on what their goals and what their current situation
That's the question always. What are you optimizing for, right? I like to rail on the financial advisors sometimes just because they can't really fight back, right? But there's some very good ones out there, right? And if you go and you talk to them, you say, hey, how do you talk to your clients, right? Like, teach me. I'm not a financial advisor. I don't know how this works. One of the things that you'll learn is part of the difficulty of their job is actually understanding who am I talking to? What are their goals? What is their risk appetite? And what are they trying to actually avoid? So for example, there are certain clients that may talk to a financial advisor. Let's say that somebody is older. They're much more worried about cash management, about yield, about being able to actually use their investment portfolio to live on. That's very different than a 25-year-old who's like, just, make it long. Let's just make as much money as we possibly can in my portfolio, right? Very different risk appetites, very different liquidity profiles, and also very different volatility appetites. And so I think that's the type of stuff that, really is hard to answer. And so as an investor, you got to ask yourself, what am I optimizing for? And then another input that people usually forget is like, what else do I own? And so what you're starting to see now is there is more coverage of people who are showing up that are saying, look, I own other assets. How does Bitcoin fit into that portfolio? Historically, whether people want to admit it or not, most people who bought Bitcoin who were early adopters, they kind of like the mind virus got to them. It infected their brain and they all had way more Bitcoin exposure than anyone wanted to admit publicly, right? I remember getting clowned on national television when I told Kevin O'Leary I had more than 50%. And frankly, I had way more than 50%, but I just felt like 50% was like somewhat of a more conservative number to tell him so he wouldn't freak out further, right? But that was really a lot of the early adopters. Many of my friends, like it was pretty much like once they found Bitcoin, they understood Bitcoin, they allocated immense percentages that would make a traditional financial advisor cringe. Now you're starting to get a lot of people coming in, and there's still some of those people who do that stuff that are kind of net new, whatever. They tend to be younger people or whatever. But most people, they're showing up and they're saying, well, maybe I should actually have a percentage 3%, 5%, something like that. I'm not going to go all in, 50% or anything like that, but I also don't want to put, $100 in. Like it needs to be material to my portfolio. Speaking of, one of the developments that happened over the last 2 weeks I thought was really meaningful. I wrote about it, but I don't think it's still got enough attention, is Rick Edelman. Rick Edelman is in the Hall of Fame of financial advisors. That's a real thing. Incredible. He's had an epic run. He came out, and for the first time, I believe, in his career, he has now made a quote unquote recommendation. His recommendation, not mine, of what are the percentages that somebody should allocate to Bitcoin and cryptocurrencies. If I remember correctly, the lowest percentage was like 10%. I didn't really pay attention to the low percentage, but I know the high percentage was 40%. And so this is somebody who, he's not like a Luddite Bitcoiner. He's not, somebody who's like cheering on the demise of the dollar or, doing anything that people would say is kind of like off-putting or quote unquote like extreme. He's somebody who has been very well respected for a long time at looking at new technologies, understanding portfolio construction, understanding risk management, building a firm, managing the relationship as a financial advisor, like all the things that really kind of go back to like professionalism and risk management. And he's now saying, for the most aggressive people, 40% of their allocation to Bitcoin and crypto. And that's just a monster number. And so even if people, they read 40 and like, I'm uneasy with that. If somebody in the Financial Advisor Hall of Fame is putting a number out like that, and let's say that his most conservative number was like 10%, he's pretty much saying that everyone in the world should have at least 10%. That's a way bigger number than people saying 1 or 2%. Right. And so I think that's kind of where this is all headed, is more and more people that maybe they were like curious, maybe they were even skeptical of Bitcoin 5 years ago. We know a lot of these people. I've interviewed these people. I talked to them privately, et cetera. They're now all kind of like, yeah, of course our clients have exposure to Bitcoin. It's not 50%, but everyone in our portfolio has got 3 to 5% or something, right? Like that is part of the mass adoption. That is really what's driving a lot of this. And I think that the percentage and how you access the Bitcoin really depends on who are you talking to.
Yeah, it's interesting because over the last few years, you would think that a lot of people's portfolio, that small percentage they had into Bitcoin actually grew over time.
Well, that also
they had 1%, now it's 5-10%, right? Just given like the natural price movement of Bitcoin.
Well, think about people who in 2022, in November, December timeframe, you could have bought a Bitcoin for like $20K. Right? Somewhere between $16,000 to $20,000. Now, really hard to do. There's going to quote unquote blood in the streets, like all, emotion, sentiment, all that stuff is working against pretty much everyone in the world.
It's down. Asset was down 80%. Right?
Doesn't feel good for anybody. You're like watching the news, headlines, companies are blown up. I mean, all the things that make it difficult. But we're talking about 3 years ago, right? 3 years ago, you could have bought the thing for $20K. Now it's back up over $100,000, right? Or it's over $100,000. And so that's not unique to Bitcoin. There's a lot. I mean, think about in the stock market. Stocks were down in April. 3 months later, we recently published an interview with Ryan Dietrich, right? On From the Desk. And Ryan talked about the stock market is up 25% from the April lows in 3 months. So everyone's like, oh, Bitcoin this, but like that seems like a lot of volatility to me. Today's episode is brought to you by Core. You can earn yield on your Bitcoin by just holding your Bitcoin. It's simple. Core, the leading Bitcoin scaling solution, will reward you for not selling your Bitcoin. It's not magic. Here's how it works. Core is a protocol secured by elected validators. You can help elect validators and secure the network by simply locking up your Bitcoin on the Bitcoin blockchain. No bridging, no lending, and just holding. When your validator secures Core, it earns rewards fueled by network activity and passes them back to you as yield. With a minimum lockup of just 1 day, when the time lock ends, you get your Bitcoin back untouched. Still your keys, still your coins, now your yield. For even higher rates, stake Core alongside your Bitcoin and multiply your yield. And if you want to see what your Bitcoin is securing, join millions of others in exploring the largest Bitcoin DeFi ecosystem. There are over 100 live apps in the network and the deepest liquidity in all of Bitcoin DeFi. Get off zero and start earning yield on even just 1% of your Bitcoin by going to stake.coredao.org/pomp. Again, that's stake.coredao.org/pomp, or go click the link in the description. In 4 months, if you go from, or call it 5 months from the peak to the trough back to all-time highs, in 5 months, Come on, stop it. We're going down double digits. We're going back up double digits, down more than 20%, up 25%, whatever. That's crazy. So actually, some of this is a Bitcoin story, but I've said it before. I think I even wrote about the idea of we live now in a volatility generation. There's two types of investors. One type tries to avoid volatility. Older, less risk appetite, all stuff. What do they want? They want bonds. They want and you see this stuff, right? There's all these new ETFs that have come out where there's downside protection. There's these income type funds where you can generate yield on single name stocks or on indexes, et cetera. But then also there's a second group of investors that are max volatility. What's the saying? Volatility is vitality, right? It's things not alive unless it's running around all over the place. I saw recently Dave Portnoy bought $10 million of Tesla stock, right? And he was I think it's gonna be a 10% bounce in 2 weeks. That's the thought process, right? That is kind of what people are thinking now. And I just think that volatility in a world where the dollar is getting hurt, inflation is higher than people expected, and there's a lot of challenges in quote unquote keeping up. Volatility actually could be a potential solution for our portfolio, and things like Bitcoin, stock market, et cetera, are kind of bringing that into the portfolio.
All right. Speaking of volatility, the US dollar has been quite volatile over the last few months. It's had its worst start to the year since Richard Nixon was in office. What's going on? Does anything stop this train?
Well, there's two different things that are happening, right? So there is the national debt and dollar debasement, which is more of an aggregate measurement. So if you go back to 2020 till today, the US dollar's lost nearly 30% of its purchasing power in 5 years, right? Horrific for anyone who has been saving in dollars. A lot of that, because we can't stop printing money. The national debt continues to explode. We're addicted to this system. Interest rates now, or our interest payments are now more than national defense. All these things people have heard. We have to continue to print money. I was very optimistic that we were going to be able to balance the budget. Take that idea, throw that one out the window, put back on your, nothing stops this train hat. We can print until the sky, right? It's going to happen under Republicans. It's going to happen under Democrats. We can yell and scream all we want. We ain't going to change nothing. So either you position yourself to benefit from it or you're going to get hurt by it. Now that is a dollar debasement story. And that has been very detrimental for people holding dollars. Asset prices, obviously, that are priced in dollars, those have gone up. The dollar strength, or the thing like the dollar index, is a relative comparison to other currencies. So now you're getting into, well, are we getting better or worse than these other currencies at a faster or slower rate, right? Are we strengthening or are we weakening? The dollar has been getting its butt kicked in terms of it has been weakening against these foreign currencies. And so that's where you see that it's down 10%, right? It's kind of losing strength. Now, one of the things that's very interesting, again, I wrote about this a couple days ago, is this idea that the US dollar has basically been trading within what they call an ascending channel. I don't know anything about technical analysis. I don't pretend to know anything about that, but somebody smarter than me said ascending channel. I said, okay, it's an ascending channel, right? Basically, it goes up, but it's a band. And what you see is that when the dollar hits the upper end of the band, that's usually when it peaks in strength. It tends to fall over time to the lower end of the band. Well, right now, worst time in history, worst start to the year, 10% the start of the year, whatever. We just hit the lower part of the band. And so what has happened in the past, doesn't mean it's going to happen now, but what has happened in the past is actually now the dollar historically has kind of U-turned and started to strengthen against the other currencies. And so that's pretty interesting because when everyone gets max bearish, like right now in the market, everyone's like, well, of course, the dollar's going to keep getting crushed. It's going to be horrible, all the stuff. Well, on the debt and debasement side, yes, but on a relative basis, maybe not. Maybe actually history would tell us that it now will strengthen and it will kind of violently turn the other direction. Let's see what happens. But I think that is a big part is understanding that it has been in this 6-month kind of very negative position, worst start to the year. But right when everyone is convinced that the dollar's done, it's over, everything's horrible, maybe actually take the other side, right? Well, what if now is the time when it turns around? I'm not saying that's going to happen. I'm not saying it's not going to happen. But I am saying that historically, if it was going to reverse course and we were going to enter into a dollar strength, right now it'd be a pretty damn good time based on the historical data for that to happen. And so I just think that you have to always questioned the like mainstream consensus. And right now the consensus is the dollar is going to continue in the direction that it is. I wonder if everyone is so convinced of that, maybe actually we're going to head the other direction.
Yeah. The consensus was also that we had a lot of uncertainty going on too, which doesn't help the dollar strength. One of the things that we just got certainty on was the big, beautiful spending bill that just passed.
I don't think that's the
July
name,
4th.
but yes, it's the big, beautiful
It's
bill.
the nickname.
Yeah, it is the nickname.
It's the nickname. So what do you think about the bill? Obviously, the big talking point here is that it's going to add over $3 trillion of debt. What's going on? We just keep spending?
Well, there's actually one of my biggest takeaways is not even in the bill. It's the conversation around the bill. So if you listen to the critics, it's going to add $3 trillion to the debt. It's this, that, bam, bam, boom, bomb, bang, boom, whatever. They all got all these complaints. If you go talk to people in the White House, in Washington, D.C., who have this kind of economic policy, et cetera, they're going to tell you it's going to add zero spending. It's not like, hey, we're debating, rounding pennies here. One says it's going to add trillions. The other says it's going to add zero. Okay. I talked with them. I interviewed Stephen Myron. I talked with a couple of other Russ Vogt, a couple of these guys, right? And my takeaway is that they actually believe the CBO, Congressional Budget Office, whatever it is, the metrics are flawed. So what the administration's viewpoint, again, you can decide at home whether you agree with this or not, but what their viewpoint is that the CBO is essentially saying, if this passes, there are going to be these tax cuts. These tax cuts then will lead to a higher deficit. I think what the administration's response is those tax cuts are already in place for the most part. We are just extending the Trump 2016, 2017 tax cuts. And therefore, actually, it's not a change. It's just a continuation. If we don't extend them, then actually it will be this massive tax hike for people who now are enjoying the tax cut. So that, to me, is actually one of the most interesting parts is immediately you cannot believe the public discourse around the bill because you essentially have two groups of very smart people who are so polar opposite on their conclusion as to what the bill's impact is that you immediately have to question everything. What it forces you to do is either just wave your white flag, say, I don't got the intellectual horsepower nor interest in this. I'm going to walk away and I just don't give a whatever. I'm going to go focus on my portfolio. Or you can go and try to understand it. And my conclusion, and I'm not an expert on this stuff, but I spent enough time trying to understand it and learn about it, talking to people, is that both sides are right. And everyone hates that answer, but that's actually true. A lot of the bill is extending existing tax cuts that are not going to add to the national debt. Then there are things like no tax on tips, no tax on Social Security, things like that were going to drive government revenue that now are going to get passed. Now there's offsets in the bill. And so you kind of get into this whole thing of like, there is this like murky middle where actually the truth lies, which is there is probably more spending than I would want to see. And maybe even actually the current administration would want to see. But at the same time, there is not the like craziness that everyone else is, yelling and screaming about. So it is a spending bill. There is increases in spending. But I think that the policy change now went from we're going to balance the budget to you saw this pivot, which is now we are going to grow our way out of the problem. Well, how do you grow your way out of the problem? You stimulate the economy. How do you stimulate the economy? You only got two tools. You pull the monetary policy tool of let's lower interest rates, or get that money printed or start putting money in the economy in all kinds of ways, right? And so that's what we're seeing. And again, we're addicted to it. And so the like conversation around this bill has reminded me that everyone's crazy. They're all crazy, right? On every which side of this thing, and they all have some agenda. And if you are trying to be unemotional about it, if you are trying to say, I don't care about political affiliations, I don't care about it, I just want to try to find what is actually true and what is going to happen, it is becoming increasingly harder because pretty much anything you read online has some degree of bias that makes it very difficult. And unless you're willing to sit and read, I don't know how long this bill is, but thousands of pages, right? Unless you're going to go sit and read the whole thing, good luck. And so I don't think that many of the politicians signing it read it.
I think single digits read it.
I would bet you that there's not a single politician who voted for this thing that read it front to back.
Yeah.
Right? Now, the same thing happens where there's a lot of documents that people use in their personal life. And, one of the things I always joke with people is like, how many people in America have a mortgage? How many people who took out the mortgage actually read every single paper? Stop. There's no way. Right. And so it's not a thing where like the politicians don't want to know everything. It's just you have a document that's thousands of pages, right? And it's constantly being reiterated and all this stuff. I think one of the bills a couple of months ago was like 25,000 pages. We're not even talking about like, okay, I'll dedicate 2 days on the weekend to read this, right? We're talking about like, it's humanly impossible to read the bill from the time that is presented to the time that you vote on it, right? And so there's staffers and there's all this stuff. And what I think ends up happening, unfortunately, is just politicians end up deciding, you know what? I'm going to care about 3 things. These are my 3, issues that I care about in this bill. I want to see these 3 things done. Other places, you know what? I can't fight every battle. Doesn't make it right. Doesn't mean it's good for the country. But I do think that there is some element of like, there's like the academic component of every politician should read every bill, with the reality of like, they just can't. And so the real solution, which again, people don't like, is just like make them shorter. What if all of a sudden no bill could be more than 100 pages? Every bill that wants to be passed, you can't be longer than 100 pages.
Simplicity is king.
Well, you could pretty much sit down and someone could read it in 3 hours, right? So that means that they can put their kid down to sleep and read it before they go to bed. That means they wake up early in the morning, they can read it, right? That means that, over a long lunch, they can read it.
Yeah, but there's a lot of nuances in these things, which is why they're—
Of course. They still need their staffers. They still need whatever. But like, if it's 100 pages or less, it's readable. And now all of a sudden what you do is you start to strip out all the nonsense language, right? And you just get to the matter of fact, which is what is in the bill. And to me, that is, it's difficult. I don't think we're going to get 100-page bills. But that is probably one of the big takeaways. Now, what do I think is going to happen? Asset price is going to go to the moon. It's just like, if we're going to spend, if we're going to drop interest rates, we're going to do all this stuff. Dollar strength, doesn't matter. Like, everything is going up and to the right because everything is denominated in dollars and they're going to let it fly. And they're telling you they're going to let it fly. The number one thing in this administration that I think people have not got comfortable with, because there's a political, like, what do you call it? Like, controversy, right? People like, they either like the guy or they don't like the guy. They like the administration. They don't like the administration. The people who don't like them don't believe them. So if you look now, they change what they say, but more so than most administrations, they're pretty open. They hold press conferences. They're constantly answering questions, like all this stuff, right?
Much more transparent.
Transparency is always this like weird thing. Just because you answer questions doesn't mean you're being transparent, but like the access is there, right? And I do think that they answer a lot of questions. People may not like the answers. People may not like the questions, whatever, but like it is more kind of what the American people need than anything. For the most part, what I have seen, they do what they're going to say. Now, you may not like what they say. You may not think that what they're saying is the right thing to do. You may not think that they understand what the implications of what they're doing are. Like, there's a bunch of critiques, but I do think that one of the things that investors who have been kind of disappointed in their investment performance, they are not believing what the administration is saying. So even look at the tariffs. They told you they were going to put the tariffs on. There's a lot of people, they're not really going to do it. It's posturing, but they put them on. Right? Then they said, we're going to hike them up. Come on. They're not really going to hike them up. Right? They hiked them up. Right? Then they came out and they said, we're going to drop them. And then people were like, come on. I don't know. Like, now we're in chaos land. Like, this uncertain. Then they dropped them. Then they're like, by the way, if you don't go and do what we say, in the deal, we're going to hike them back. Like, again, it's chaotic because it changes fast, but they actually do end up following through a lot. Now, you heard the taco trade? Mm-hmm. Trump always chickens out. Everyone kept saying that, right? And then, in probably one of the most ridiculous, it's still crazy how precise this whole Iran bombing thing. From what I understand, they dropped a bomb or a bunker buster into a ventilation tube. And then they dropped a couple more in the same hole, from what I understand. Like, you seen the new Top Gun movie?
That's what I was thinking of.
I'm like, wait a minute, how'd they get the plans out to the movie theaters before we ever used the plan? Somebody leaked that, right? How you telling me Hollywood somehow knew that we had the capability to flip over upside down, go in this U, drop a come on. Your greatest imagination could not be we can drop a bunker buster bomb into the hole that, by the way, if it was a jailbreak, people would have a hard time getting out of the hole, right? I mean, think about a ventilation. Like, there are movies where people get stuck in the ventilation. And so we were somehow able to drop a bomb in there. It's crazy to me that Hollywood had the blueprint before we ever used it. So somebody leaking somewhere. But it goes back to, again, it's like they kept saying, you can't have this, you can't have this, you can't. And they did it. Now, again, are there times where they don't follow through? Of course, right? Big controversy right now. The videotape of the whole Epstein thing. Supposedly, from what I've seen, I have not watched all 12 hours or whatever was released, right? Supposedly there's 1 minute missing. I don't know. They say they had the list. Now there's no list, right? So I'm not here to comment on anything other than economics. But when it comes to economics, today's episode is brought to you by my partner, Bitwise, the global crypto asset manager. Bitwise has $10 billion in client assets, a team of 100 plus people, and more than 30 crypto products. One more thing, they've also got one of the best weekly newsletters in crypto. I say that as someone who's no stranger to newsletters. Take it from me. Bitwise's weekly CIO memo is dynamite. The weekly CIO memo is written by Matt Hogan, one of the best minds in the business. Matt has a knack for seeing the crypto stories that people are missing, or digging a level deeper on things like the strategic reserve, corporate Bitcoin buying, or crypto price predictions. I highly recommend it. Matt's got some really smart and bold takes and a lot of wit. And the memo takes just 5 minutes to read each week. So head over to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo and check it out for yourself. The Bitwise Weekly CIO Memo. Hot takes on crypto's biggest stories. And always, of course, carefully consider the extreme risks associated with crypto. Today's episode is brought to you by Gemini. Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. So good news, Gemini designed a product just for this. Meet the Bitcoin credit card powered by Gemini, which offers instant Bitcoin rewards on every purchase. This MasterCard World Elite product has no annual fee and no exchange fees to acquire your Bitcoin rewards. It's that simple. The magic of the card doesn't stop at the rewards. The card is sleek metal design that comes in rose gold, silver, black, and the new limited edition Bitcoin orange. Sign up today to earn a $200 Bitcoin bonus to jumpstart your Bitcoin portfolio whenever you spend $3,000 in the first 90 days. Obviously, terms apply. Go to Gemini.com/card for more details. That's Gemini.com/card. Go check them out today. When it comes to economics, I think that most people have basically said, I don't believe them. And actually, the people who have said, I just believe they're going to do what they say, regardless of whether I think it's the right thing or not. Those people have done much better than the people who have not. And it's not a political thing. Like I think people at this point pretty much know, right? I don't care what political aisle you're on. I don't care. All I care about is what are the policies when it comes to economics. And from an economic standpoint, what are the things that you're doing to actually help people? Right now, here's a mind bender. Jerome Powell is part of the Trump administration. Now he's supposed to be independent. He's this, that, whatever. Donald Trump is the president. Jerome Powell is part of it. Jerome Powell has interest rates held, I believe, artificially high. He is punishing the American public by doing that. They don't have access to cheaper capital. Mortgage rates are higher. Homes are more unaffordable. All these issues. Whether the president and the administration agree or not, it is part of their administration. So now you get a thing where you actually have folks who are doing things that even the administration, obviously publicly, are saying they don't agree with, but it still falls under that, right? And so it's like this weird dynamic of when you put the political overlay, everyone wants to point fingers about this politics, whatever. At the end of the day, we're addicted to cheap money. We got to print money. So guess what they're going to do? They're going to print money and interest rates are going to go down over time. When they do that, guess what's going to happen? Asset prices are going to go up. You can sit around and you can pontificate with your friends while you drink a beer and smoke a cigar as to who politician, this, that, whatever, or you can go make money. And what I think is now happening is there was like a whole Twitter generation who didn't care about politics, politicians and regulators like tapped on their door, and all these people are like, damn, I got to pay attention to this now, right? And some group of them, they're addicted. They're like, I'm deep down the politician rabbit hole. This guy's like a soap opera, right? I got to focus on all this stuff, whatever. Another group of people say, just let me operate my business, right? Whether they're in crypto or AI or psychedelics. We go through all these like emerging things, all the way to even space, right? I mean, I'm an investor in a company called Varda. It's a private company. They basically put a manufacturing like physical hardware into space. They manufacture pharmaceutical drugs and they bring it back down. At one point, I think definitely in the last 2 years, they had one of their first devices was stuck in space. They couldn't bring it back because the regulators wouldn't let them. So guess what they did? They said, okay, well, we're going to have to work through this process. But then they also went, and I think it's Australia, gave them the thumbs up. Hey, you can come launch here. We'll bring stuff back. We're commercial. Now, all of a sudden, my understanding is that they got a lot more, collaboration with the U.S. government because competition entered, right? So it's not just a Bitcoin thing. It's not just whatever. But I do think that we are bifurcating where, like, if you get addicted to the soap opera of politics, you're going to have a very hard time looking soberly at the market. But the people who are able to understand what's happening, but frankly not care and just say, what are they saying they're going to do? Do I believe they're going to do it or not? If I think they're going to do it, what are the implications, whether I think it's a good idea or not? That is a much different analysis than saying, I don't like them. I like them. This is good. This is bad. I would do this other thing. You're not the president. You're not the Commerce Secretary. You're not the Treasury Secretary. You're not the head of the Federal Reserve, right? You're the investor. So do investor things, which means allocate your capital based on what's happening in the world, not what you want to happen in the world. And I think that there's just a lot of people who kind of forgot that. And so I can speak for me personally. I look at the world. The number one thing that they are going to do is they are going to debase the US dollar. When they debase the US dollar, asset prices are going up and to the right. And I think that Bitcoin will be one of many assets that do very well. I think that Bitcoin probably will do much better than many other assets. And so I've been focused on it for a long time. I'm going to stay focused on it for a long time. I think that it's pretty much the, conviction test of our generation is if you have an asset, which mathematically has now been proven to be the, I believe the words that Lynn Alden and Sam Callahan use are the barometer for global liquidity. If you think global liquidity is going up, guess what else is going up? Not that hard. And so I just think that it's why I've come to the conclusion that Bitcoin is the new hurdle rate. If you can't beat it, you got to buy it. And there's a lot of people who they can't beat it, but they ain't buying it.
I know the first time you heard Varda and you were like, wait, y'all are manufacturing drugs in space? Like you probably did some due diligence, but that was probably a vibe investment.
Well, at first, they weren't doing drugs at first. They were trying to figure out what they were going to manufacture. There's a lot of different things that they were thinking about. But no, it's interesting because, that investment in particular had two intersecting things. Delian, who's at Founders Fund, who's a friend of mine, he's just the type of person, like, I don't care if he told me he's going to create lemonade stands. I'm in, right? Because guess what? He's going to take over the lemonade game in New York City within weeks, right? He'll figure it out. Like, I don't know. It's just like the guy's going to figure it out. So when he said he was starting a company, I actually don't remember if I asked him what it was or not. I'm pretty sure that either he told me like the one-liner or he was just like, I'm starting to come. I'm like, I'm in. Okay, what are you doing? Right. But like, it did not take a lot of convincing. I didn't need to like see the financial projections of his company or anything. Just like, I just want, like, one, he's my friend, but two is he's the type of person that you wanted to give money to and he'll figure it out. Right. The second thing is he's like, yo, we're going to space. That's cool. And what I've learned in life is when you have somebody who can figure it out, and they're doing cool things, invest. Yeah. Put the money in. Now, people will hear that and be like, I'm doing this cool thing. I'm doing like, it's probably not that cool, right?
Twitter DMs are open, by the way.
Yeah. But like their whole thesis was, why don't we go to space? But rather than go to space to get to Mars or go anywhere else, which by the way is a very admirable and commendable thing to do, why don't we use space to benefit us here on Earth? Kind of different way to think about it, right? Now, that's actually been the winning theme so far, right? If you think about Varda, if you think about Starlink, if you think about a lot of this stuff, right? GPS, all this stuff is we're using space around Earth to benefit us here on Earth. that has been the theme. And so I think there's a lot of companies like that are out there. It's just back the right person, doing cool things. And like, what better job to have than make money backing your friends doing cool things? Like, that's like a dream job for most people.
That is. Let's talk about something. Let's round up here with something that I think encompasses everything we've talked about today, which is Bitcoin, which is space, which is politics, which is Elon. Elon's creating a new political party. A lot of people have tried this. He's probably one of the guys that has the financial means to make a significant push. But one of the things that was interesting was someone tweeted at him and said, "Will the American Party embrace Bitcoin?" Elon's response: "Fiat is hopeless, so yes." What's your takeaway from this?
Well, I don't know who's running the Twitter account of the America Party. So maybe it's Elon, maybe it's somebody else. But are they wrong? It kind of goes back, like, again, I don't subscribe to Republican, Democrat, America Party, or anything else. I'm an American, but the party affiliations, I don't care about those, right? Everyone can choose their own thing. But who doesn't believe that, right? Like, if you think that fiat currencies are the path to financial security, then put 100% of your money in it, or put majority of your money. Every rich person I know, they have majority of their money not in it, right? And they're using the debasement to their advantage. And so I think that it is, it's not even like controversial. It's like a duh. It's like saying like the sky is blue, right? Like, yeah, of course the sky's blue. Of course fiat is hopeless in terms of its ability to store wealth over a long period of time. Remember, the US dollar has lost about 30% of its purchasing power in 5 years. It's crazy, right? That's not like, I talked to my grandpa and he told me, a Coca-Cola used to be 5 cents and now it's $1.20, right? Because you're like, yeah, grandpa, we got it, right? That's not like, back in my day, I got to buy a house for $25,000. Now it's worth $1 million, right? Yeah, grandpa, we got it. That's like, 5 years ago, I personally had way more purchasing power than I have now.
Or I went to buy a home and it was $250,000. Now it's $500,000.
And now grandpa is telling people like a little squirt. Now you see what I've been saying, right? So I think that is kind of a no-brainer. On the political party stuff, I do think that having multiple political parties is better than having one, right? Having 3 is better than 2. Having 5 is probably better than 2. I don't know if it's actually helpful to have like 20. So there's some magic number between probably like 2 and 8 or something, where you have enough competition, but you don't have such fracturing that like there's just constant fighting all the time, right? And so having a third one is probably a good idea. It doesn't mean that this one is the right one. Doesn't mean this one's going to be successful. It's very hard. A lot of people have lost a lot of money doing it. But if there's one person who could do it, it's the guy who's averaged a multi-billion-dollar company every 5 years for now 35 years. Like, the guy, just don't bet against him. Yeah. That's why I was so bullish about the Doge thing. And so I think that they ran into a lot of brick walls that were insurmountable. What is it like? The people who are the best at something, the odds that they lose one match, like let's say in sports, is usually pretty low. The odds they lose 2 matches in a row is like near zero, right? I wouldn't bet against them, but I think it's very hard. And I do think that he may become frustrated and realize the political stuff is less of where he can have impact. The better thing, obviously, is building the companies. And again, like, look, he gets a lot of critiques. I think he's the first one. He said it publicly, right? My favorite Elon quote of all time. You see all these like motivational quotes. You see all these like Instagram things, YouTube videos, people tweeting all this. My favorite line Elon's ever said is the opening of SNL when he hosted it. And he says, I'm trying to go to Mars. Did you think I'd be normal? Right? Like, or whatever, the paraphrase. And it's like, yeah, like he is self-aware, right? Does Doesn't mean he's normal. Doesn't mean that he's going to change, whatever. But like he is self-aware. And so I just think that these political party stuff is much harder. But having a political party also requires you to have candidates that can win. And what I, again, very cursory reading is he is trying to pick a couple of House and Senate races, a very small number where he can go and basically win and have his candidate be successful. And if he does that, then he's basically able to insert himself into these very contentious votes where now all of a sudden those candidates that they've been able to flip are like the deciding votes. So again, makes sense. Just very difficult to do.
Yeah. All right. Thank you.
All right. Thank you guys so much. We'll see you guys next week.